Dividend stocks are one of the best assets that you can own to become wealthy. My list includes a mix of well-established and well-known companies that have been consistently increasing their dividends over the years. Some of them are even owned by the greatest investor, Warren Buffett. In this video, we'll look at my 7 best dividend stocks that could provide a steady source of passive income and long-term growth. But before we dive in, we'll quickly go through what a dividend is, so you can have a better understanding of the great advantages they provide. In simple terms, a dividend is a payment made by a company to its shareholders as a portion of its profits. When a company earns a profit, it can choose to reinvest the money back into the business or distribute it to its shareholders as a reward for their investment. For example, if a company declares a 50 cents per share dividend and you own 100 shares, you will receive $50 in cash. When a company pays dividends, it means that it is distributing a portion of its earnings to its shareholders. This can be seen as a positive sign for the company, as it indicates that the company is generating profits and is financially healthy enough to reward its shareholders. Some of these companies have been paying dividends for over 50 years. Once they pay you, you can decide to reinvest the dividends into the company to get even more. It's one of the long-term strategies you can use to grow your wealth. First on the list is Procter & Gamble. This American consumer goods company owns several well-known and trusted brands, such as Tide, Pampers, and Gillette. These very popular brands have a strong competitive advantage and are likely to continue generating steady revenue for the company. Currently, it offers a dividend yield of 2.55%, which translates to $3.76 per share annually. Its payout ratio is around 59%. Which leaves the company with enough retained earnings to reinvest in the business. Procter & Gamble has a long history of paying dividends and has consistently increased them for an incredible 67 years, making it a dividend king. The 5-year dividend growth rate is around 5.7%, and the 10-year is around 4.8%. This demonstrates the company's commitment to rewarding its shareholders, its ability to generate consistent cash flow, and its competence to grow earnings even during challenging economic times, which is a testament to its strong business model and management team. Next on the list is Home Depot, the place where DIY dreams come true and where you can find everything from power tools to garden gnomes. Home Depot pays a dividend yield of 2.44%, which may not seem like much, but it translates to a hefty $8.36 per share annually. This high dollar amount is likely due to its strong financial performance and high share price. The company's dividend payout ratio is around 52%, which means it still has plenty of room to reinvest in its core business while continuing to pay out that sweet dividend. Stockholders have seen a 5-year dividend growth rate of 16.4% and a 10-year of 20.7%, demonstrating its commitment to consistent dividend growth, which they have done for the past 15 consecutive years. Home Depot is a good dividend stock to own due to its consistent growth, above-average yield, and healthy payout ratio. This company is a safe bet for dividend investors, offering a reliable stream of income and a bright future for its stock price. It's like that reliable friend who always has the right tool for the job and never lets you down. Next up is Coca-Cola, a stock that Warren Buffett has been holding since 1988. Coca-Cola is a beverage company that owns a multitude of popular brands like Powerade, Fanta, and Sprite, making it a veritable beverage empire. With a dividend yield of 3.08%, Coca-Cola offers a higher yield than the average for its sector, and it pays an annual dividend of $1.84 per share. While its payout ratio of 72% may seem high, it has a long-standing history of consistently increasing its dividend for an impressive 62 consecutive years, showcasing its strong cash flow generation and ability to generate profits even during economic downturns. Coca-Cola's 5-year dividend growth rate is 3.4%, and its 10-year is 5.2%. The company maintains a healthy balance sheet and boasts a strong brand portfolio, providing a competitive advantage and a steady stream of revenue. Given its global popularity, Coca-Cola is a title that could well exist for a long time. So if you're looking for a dividend stock that's both financially rewarding and has the potential to stick around for a while, Coca-Cola is a great stock to own for sure. The next stock is JP Morgan Chase, a prominent financial institution that provides a diverse array of services, including investment banking, asset management, and private banking. The company also has a significant presence in the credit card services industry in the United States and Canada. The current dividend yield of 2.44% is higher than the industry average, and it pays an annual dividend of $4.20 per share, making it an attractive option for income-seeking investors. Additionally, the company has an impressive track record of increasing its dividend for 14 consecutive years, with a 5-year growth rate of 12.9% and a 10-year of 13.7%, showcasing its commitment to rewarding shareholders. This consistent growth can be attributed to the company's strong financial performance, which has allowed it to maintain a healthy dividend yield. In terms of financial strength, JP Morgan has a healthy payout ratio of 29%, which allows the company to maintain its dividend growth while also having the flexibility to invest in future growth opportunities. The company's recent stress test results and outlook are also positive, indicating a strong future performance. The next up is Chevron. Chevron is a multinational energy corporation predominantly specializing in oil and gas and has been quite a popular company among investors. In fact, some even consider it one of their favorite stocks. Chevron has been consistently increasing its dividend for the past 36 years, with a current dividend yield of around 4% and an annual dividend of $6.04 per share. It's a well-oiled machine that keeps giving back to its shareholders. Some big names in the investment world, like Warren Buffett, have also shown their love for Chevron by holding large positions in the company. As for the payout ratio, Chevron is sitting at a comfortable 45%, leaving plenty of room for reinvestment in the business and potential dividend growth. They've even managed to increase their dividend on average by 5.8% in the past 5 years and by 4.2% for the past 10 years. With a healthy dividend yield and a reasonable payout ratio, no wonder that Chevron is making waves among investors. The next stock is Johnson & Johnson, a company that's been around probably longer than my grandparents. It's a healthcare sector giant, producing various products under well-known brands like Band-Aid, Tylenol, and Neutrogena. Their product line is extremely diversified, ensuring a wide range of revenue sources. They've been paying dividends for an impressive 62 consecutive years, which makes them a dividend king. The company dividend yield is around 2.95%, which translates to a respectable $4.76 per share annually. With a 5-year dividend growth rate of 5.9% and a 10-year of 6.3%, the company has a history of consistently rewarding shareholders and generating cash flow. Their dividend payout ratio of 34% leaves room for further growth, making it a stock that could potentially keep giving back to its investors. Johnson & Johnson is a reliable dividend stock with a long history of consistent growth, making it a safe bet for investors looking for a steady stream of income. It's like that dependable relative who always has a Band-Aid and a hug when you need it. The final stock on our list is PepsiCo, a multinational food, snack, and beverage corporation that serves a wide range of customers, from wholesale distributors to grocery and drug stores. With a product portfolio that includes Pepsi, Lay's, Doritos, and Gatorade, PepsiCo is like the life of the party that keeps everyone happy and satisfied. Currently, it offers a dividend yield of 3%, which translates to $5.08 per share annually. While its payout ratio of 78% may seem high, the company has a long history of paying dividends for 52 consecutive years. This commitment to rewarding shareholders is further demonstrated by its consistent 5-year dividend growth rate of 6.9% and a 10-year of 8.1%. PepsiCo's diverse product offerings, strong brand presence, and reliable financial performance make it a stock of which people will never have enough. It's like that one friend who always brings the best snacks to the party, you just can't get enough of them. Investing in dividend stocks can be a great way to generate passive income and build wealth over time. Those companies have a strong history of paying and increasing dividends, making them attractive options for income-seeking investors. Keep in mind that there are many other great dividend stocks that aren't shown on my list but are worth having. Remember that investing in that type of stock is just one aspect of a well-rounded investment strategy. Diversifying your portfolio and considering your risk tolerance and long-term financial goals is essential. Always do your research and stay informed about market trends and company news to make the best investment decisions for your unique situation. If you found this video helpful, make sure to like and subscribe for more content on personal finance and investing.